How's it going, everybody? This is going to be the first video in a new series that we're going to be starting. I'm going to be calling this the Playbook series. What we're going to be doing in this series is I'm going to be making short form videos. Most of my videos on YouTube are very long format, over an hour long. I'm going to try to keep these videos to around 10 to 15 minutes, maybe even less than that. And we are going to try to give you guys a trade example of setups that we use on a day-to-day basis when we are scalping ES. We're going to start this series off with one of our favorite setups we've been using for a very long time, and it's been very prevalent in the last few weeks. This setup is a very good capital generator. It generates a lot of profit, and it has a great success rate. So this setup is a distribution setup. We basically look for when price is distributing, but it's giving a bear div on the cumulative delta. So the things you guys are going to need for this setup, you're going to need a 1 minute price chart and the 1 minute cumulative delta. A couple of add-ons that I like to use with this setup is VWAP. We use the session VWAP, which starts at 6 p.m. Eastern the previous day, and the daily VWAP, which starts at 9:30 that current day, 9:30 a.m. Okay, so what we look for on this setup is we look for a strong impulse out the gate from ES or whatever instrument you may be trading. So you want to see that strong impulse up out the gate with good delta. We want to see that delta following price, as we can see here. So after we have this strong impulse up, you want to see some type of rejection. You want to see price starting to find that high. So in this case, we can see that high starts to build up somewhere around this level right here. So that high is being generated around 46.05 and 46.06, give or take a few ticks. So that is the high of the distribution for that current impulse up. And then we start to pull back towards VWAP. So this is the second thing you want to look for. You want to look for where it is finding support, because that is going to be the distribution low. So in this case, that distribution low would be somewhere around VWAP, which is this solid line right here. That's our daily VWAP. And the dotted line is our session VWAP, just for future reference. So that support is being found somewhere around VWAP, which is creating that distribution low. Okay, so the first thing we look for, that strong impulse up out the gate. Second thing we look for is where it starts to reject. That will give us the distribution high. And then where it starts to find support, that will give us the distribution low. So in this case, we could have used this low right here and this high right here as our distribution. The reason we're not going to use that is it's only a 1, 2, 3 candle formation. So you didn't really give enough time to build value on either one of those levels. So when we're figuring out where the distribution high or the distribution low is, we want to give it a few candles more than that. The 3 candles is just not enough. Okay, so right here we had 1, 2, 3, 4, 5, 6, 7, 8, give or take 5 to 10 candles kind of in that area. And you had at least 5 to 6 candles forming that high there. And then same thing on the low. You could say about 10, maybe 15 candles are ranging on that low. And then you have about 5 candles kind of creating that exact low. So you want to give it at least, I'd say, 5 to 10 candles to create that higher low. If it's only 1 or 2 candles, it's not enough. Okay, so that is why we didn't say that this right here was that distribution high and distribution low. We need to give it some more time. Okay, so now that we have our 3 things we look for that impulse up, and I'm not sure if I said this earlier, but you need the delta to be following price on that on that impulse up. So we have the impulse up, delta is following. That is the first thing we look for. Second thing, We have the distribution high and the distribution low. Okay, so now we have the pattern starting to form. The next thing we want to look for is on that attempt to break the distribution high. What is the delta doing? Is the delta following price or is it showing a bear div? So on this first attempt to break the distribution high, delta is following price. It is still moving up as price is moving up. So we cannot use that for our bear div entry because it's not giving us a bear div. Okay. So we start to push up here. It tries to find some value, but it really starts to form a resistance level kind of around here. So around 4608, it starts to form another resistance, which is just above that previous distribution high. So what we want to be looking for, if it does break that distribution high, keep an eye on that delta. When is it starting to show a sell-off or a bear div? So right here, it starts to sell off rapidly with price. So this is not a bear div. This is just showing a clear rejection of that breakout, which is trying to break that distribution high. So that is not the exact trade entry. But look at this next attempt right here. This attempt that starts at 1019 and goes until 1027. Look at the big difference here on delta. So pay attention to these highs right here. These two highs are putting in a double top, but look at delta here. Delta is clearly putting in a lower high. Delta is selling off even though price is rising into that resistance level. Okay. So there are two ways we can trade this. We can take the aggressive entry right when that bear div is showing, which is going to be around, let's say 1019 is where the bear div starts, and then 1027 is when the bear div really starts to play out. So this would be the aggressive entry, just following that bear div without really seeing that price confirmation. The more passive entry is if we reclaim that previous resistance, which in this case would be that distribution high, with that bear div confirming. So now our delta is starting to come down with price, and we have lost that clear resistance. That is the more passive entry here. Okay, let me show you how we would trade this setup. So when you start seeing that bear div forming, you can take an aggressive entry without waiting for confirmation during that bear div. So anywhere in the span of 1019 to, let's say, 1027, you can take an aggressive entry. What I like to do is if I'm taking that aggressive entry, I will take about half the normal size that I normally like to take. And what I'll end up doing is I will take the remaining half on the passive entry, which in this case would be when that bear div really starts to play out. When you start to see that sell pressure coming in on the delta, on the DOM, on the tape, whatever you like to watch for momentum. When you start to see that momentum coming in, that is when we'll take the remaining half of our position. Then what we'll do is we will put our stop loss above that double top, if it's double topping or wherever that resistance may be. So in this case, we will put our stop loss, let's say 2 to 5 points, depending on how much we want to give this, above the previous high. So let's just give it, let's say the high is at 4608. Let's give it 4 points here. And we're going to go to 4612 with our stop loss. If you want to be a little bit more aggressive with your stop loss, you can give it less points. but usually I'm in the realm of 3 to 5 points. Now, what are we going to target? We are going to target these liquidity levels below us. So the first liquidity level that we like to target is that original distribution low. So we can go ahead and delete this. That was our distribution low. You can see we started to pull back. We formed the distribution low here. That is going to be our first target. Now, you can target that level by front running it. So like we could say we could target somewhere like there, or we could look for a sweep of that level and you can target below that distribution. Now, I don't have a set in stone way that I like to do it. Most of the time, I will be targeting that level. We'll maybe take some profit before the level. We'll take some profit when it sweeps the level. But just know that your target is going to be around that distribution low. The next target that we like to take is VWAP. So depending on where VWAP is going to be after that distribution forms, we like to take a target. And usually this is the final target for the trade if VWAP is a good ways away from our entry. So in this case, let's say our entry is 46.08. Just to make it easy, our stop loss is 46.12. That's a 4-point stop loss. So let's say if VWAP is at least 5 to 6 points away, that is going to be where we take the bulk of our trade off of the table. So in this case, the daily VWAP was around 46.04. That's only giving us a 1-to-1 risk reward. We're risking 4 points to make 4 points. The session VWAP here is almost about 10 points away. So that's giving us over a 2-to-1 risk to reward. So if we hit that level, I am very happy taking the majority of our position off of the table. Now, if you really like your entry and you think that this is going to run, the final level that we like to target is, if you remember, the first thing that we looked for was that impulse up. Where did that impulse begin? So in this case, the impulse started right at the daily open. You can see we just started ripping higher right out of that daily open. That's where a lot of that delta started. That's where a lot of the momentum started. So we are going to say the point of origin of that impulse is right around, let's say, 94 to 95. The final target, if you want to leave a runner and you want to be greedy on this position, is sweeping that liquidity. So think about, if people were longing this level, where are they putting their stop losses? They are either trailing their stop losses below these lows, or they have somewhat of a break-even stop, or they are putting it below where that impulse started. So in this case, that would be somewhere around 93. So that would be our final target if we want to leave runners on this position. Okay, so that is the entire position. Let's go over it one more time. I know it's a little bit confusing for some of you. So let's go over it one more time here. So first thing we look for, impulse up. Right out the gate, it's opening strong. We have good delta. Delta is following the price, so we do not have a divergence. Second thing we look for, where is price beginning to fail? Where are we starting that distribution high? And make sure, like we said earlier, to give it a few candles. You don't want to see just an immediate failure. You want to see some kind of value forming on that high. That creates your distribution high. The third thing we look for is, where does the support come in after that distribution high? And same thing, give it some candles, let it build some value. That is going to form your distribution low. Then the final thing we look for the entry is that very obvious bear div. We want to see a higher high on price or a double top on price, and then a lower high on delta. That will give us our entry for this position. Once again, there are two ways you can enter this position. You can take the entry when that bear div is starting to show without seeing a major confirmation. That is a very aggressive entry. The more passive entry is when that distribution, or excuse me, when that divergence starts to play out and you see that momentum to the downside. So that would be the passive entry. What I like to do is I will take half the position on the aggressive and the other half on the passive entry. Stop loss is going to be above where the high was formed. Typically, you want to give it at least one ATR, so one average true range volatility. We like to say if volatility is anywhere from 3 to 5 points, we will give it a 4 to 5 point stop loss. The first target would be the distribution low, or if there is a VWAP above that. Second target is the other VWAP if the session VWAP is lower. And then the remaining runner, if you want to leave a runner, is the start of the impulse, the point of origin where that impulse was started. Anywhere in that area, you can take profit. You can take profit where it started exactly. You can take profit on the bottom of that level if it wants to sweep the liquidity. Just anywhere in that area will give you a great final target. And as we can see on this day, it played out beautifully. And if you guys want to watch how we traded this, or you want to see how we talked about this trade, go back to the live stream on 7/19 around 10 o'clock in the morning. But all right, guys, this is it for the first episode of our playbook series. This is the distribution short, one of our favorite patterns. And it's a pattern that typically works, I'd say, over 60% of the time. It's a very good strike rate if you see that obvious bear div. If you guys like the video, make sure to hit that like button, and I'll see you guys in the next video on our playbook series. See you guys later.